Looks like a beautiful Friday morning here in New York City, and the new jobs report will be out later this morning. Steve has some economic signals he says are entering yellow and red territory as President Trump continues his multi-front war on trade. Steve Rattner's got the charts for us. Steve, what are you looking at?
So it seems like not very long ago that we were talking about 3.1% economic growth in the first quarter and lots of jobs, and we may get lots of jobs today. But there's a bunch of stuff going on that we should worry about. And let's look at something called the yield curve, not something we normally talk about on Morning Joe, but it's the difference in interest rates on short-term government debt and long-term government debt. Normally, the government pays more as the maturity, as the term of the debt gets longer. But sometimes it flips around, and short-term debt is more expensive than long-term debt. And as you can see, if you look at history, there have been 7 times in the last 50 years where that's happened, where long-term rates have gotten below short-term rates, and every single one of those has been an indicator of a recession about to occur. And you can see them all right there. Every single time that's happened, we've been in a recession. Every recession has been preceded by that happening. We have fairly recently entered into that same period here, if you look at that last circle over on the right, where the market is saying we're really scared of what's going on out there.
So what's the layman explanation for that right there?
Why does that happen?
Yeah.
It's because people, it's a flight to quality. People are scared of other kinds of assets, so they decide to buy long-term debt, U.S. debt, and they bid the price of the debt up, the yield goes down. And also sometimes they worry about deflation, that if we're going to enter a period of deflation, which has been a recent worry, that you might also do that.
But why are they scared in this moment, and what is the role of Trump's trade war? And then also, what happens if he actually imposes the tariffs, because that hasn't even actually happened yet?
All good questions. So let's keep going, and hopefully we'll get answers to some.
By the way, guys, they worked this out before.
They did. Yeah, this is
at home. This doesn't happen.
No, I said I was asking about the yield curve.
We did a seminar on the yield curve earlier.
Yeah.
But look, let's take a look at the effect of tariffs on the market. So you can see here, the stock market has actually had quite a good year until Trump threatened to impose tariffs and started imposing tariffs back at the beginning, and that was in early May. And since then, the market has gone down this is the stock market, has gone down 3.5%. On the other hand, if you look at interest rates, the market at the beginning of the year was expecting interest rates to be raised this year 2 or 3 times even. This was in our period of optimism. The market has steadily reduced its expectations, and the market now expects interest rates to be cut this year. There's a 70% probability interest rates will be cut by July. And that obviously is another sign of economic weakness. And then in answer to your question, Heidi, of what's the impact of tariffs been on the economy, we can't disaggregate it, but let's take a look at what's going on in the economy based on one indicator, which is manufacturing sentiment among purchasing managers. It's considered kind of a leading indicator of what's going on in business. And this is divided among 3 regions. And so you can see that the U.S. is up here, and you can see that we are sort of declining in here. And once you cross that 50% line, you're considered to be in recession. So we are very close to having no activity. And if you look at China, you can see that China has kind of been bumping along this blue line at around the 0 line. And if you want to be also scared, and this is important to us because we want the global economy to do well, Europe has been in a very steady decline and is now well below the 50% line.
But I thought the tax cuts were supposed to put us in a manufacturing renaissance.
Well, that is a great set of charts that I will bring next time, because when you look at the jobs numbers in manufacturing, we almost stopped adding jobs in manufacturing. Look, the tax cut has proven, and there are charts that we will do one day, to have been a bit of a sugar high, and we got that first quarter growth. We got some earlier growth, but now it's fizzling out. And in fact, the estimates for growth in the second quarter, 3.1% in the first quarter, we're probably looking at about 1.2% in the second quarter.
So, Steve, the President of the United States will look at all those charts and say, unemployment's low. We might get a good jobs number this morning. Consumer confidence is high. The markets have been doing relatively well. This is a strong economy. What would you say back to him?
Well, I show him some of these charts and say the market.
But he doesn't read, so you have to explain.
No, what's the
charts? They're pictures. They're pictures. Look, I would say to him, fine. You know, we'll see what goes on. But right now, there are a number of really worrisome indicators coming out. I just showed you some. When you look at industrial production, things like that, the numbers are weak. When you look at trade numbers, the numbers are weak. And we're going to all find out over the next few months who's right. The market, which is basically saying we're really scared. We think interest rates need to be cut. We think economic activity is slowing dramatically. Or maybe the president will turn out to be right. But I'm pretty respectful of markets.
And this is without the tariffs, just the threat of tariffs. We'll see what happens if he actually implements them.
Thanks for checking out MSNBC on YouTube, and make sure you subscribe to stay up to date on the day's biggest stories. And you can click on any of the videos around us to watch more from Morning Joe and MSNBC. Thanks so much for watching.